Hello, and welcome to another update video about Optimism. I haven't covered it for a while, but no support broke. Instead, the price actually nicely dipped into the support region that we communicated in the last video and actually reversed, so the parameters are being respected. What I like specifically is that the 50% retracement level, the 38.2 retracement level at $2.59 acted as support, which is typically an ideal support for a fourth wave. So price reacted to an ideal level and is already progressing to the upside, hasn't made a new high yet, and the overall structure on this chart remains unchanged for now. I'm still of the opinion that the market is moving in a potential diagonal pattern within this ascending price channel, within basically this it's a diagonal channel to the upside. Okay, and what we now need to explore is which levels now need to hold for this fifth wave to the upside to unfold that you see there on the chart. We also want to talk about next upside targets for wave 5. But what about a short-term bearish scenario? We talk about that as well. So first of all, looking at targets, we have this initial 1-2 setup. And if we just take the length of this wave 1, which topped in August last year, and we go to the low of the wave 2, then we see that this third wave did not even reach the 200% extension. That's okay. I mean, they don't need to. Typically, we say for a third wave, anything above or anything including the 1.38 extension level or above is ideal. Further extensions always possible. The wave 3 reached the 1.786 extension, in this case at $4.21. Now, then we had the pullback, and that might still be unfolding, but we can use that information to establish where the wave 5 might top. We have at least the next level that seems relevant at $6.47. It's the 2.382 extension. Typically what I prefer to do, if the third wave reached a certain Fib target, then the fifth wave should aim for at least 2 steps on the Fibonacci ladder above. That is on my Fib ladder here, the 2.382 extension, or even the 2.618. Here we talk about $7.68 next, yeah? So that's what I'm watching. However, there is currently no evidence that the fourth wave is complete. So let's talk about the short-term bullish and short-term bearish scenarios. But also, there might be another way of calculating targets. What we can also do is we take the length of waves 1 and 3 together. Then we go to the low of the fourth wave. Of course, I have no confirmed low in place for wave 4. So this might still change. This is still subject to change. And you can see here that the 61.8 extension level, which is a very common target when measuring it like that, this level points to $6.96. So very much an overlap with that target area that we already have there on the chart. But I need to take out the other fibs, and I want to leave that one on the chart for future reference. Now, let's also talk about a short-term bullish and short-term bearish scenario, because while the market dipped nicely into the support zone, let's just check the wave 2. I mean, can you see this? The wave 2 unfolded between August last year and October last year, so a couple of months, okay? This correction unfolded between the 12th of January and the 23rd of January. Doesn't make much sense. So either the wave count is off and this was just a lower degree fourth wave, or we are getting most likely here a larger A, B, C structure, which I would prefer. So I'm just very much aware that we could see still another dip into support. If that happens, the level around 592, the lower boundary line, or the $2.20 level might be tested again. It's 259. 259, the lower boundary line, or 220. They could be tested again in a more extended ABC structure. It is the case that we don't have a confirmed low in place in wave 4 until we see a first 5-wave move to the upside. So I need to see 1, 2, 3, 4, 5. At the moment, we only see 3 waves up. Technically speaking, this was the area to add positions, to scale in. And now you might just define a resistance area maybe somewhere up there. And it's just a suggestion for tactics. Okay, I'm not telling you what to do, but it is technically speaking a range now between, let's say, you could say $4.18 and the last swing low, or even the 220 level, and then basically buying as it dips, selling as it goes higher, buying as it dips, because this is going to be a range, and it only changes once we have the first 5-wave move to the upside. So there's no way to predict exactly what's going to happen right now. We don't try to predict. We try to identify exactly those parameters that are useful for trading. And I can tell you that as long as we're holding the orange support area, an overall bullish scenario remains reasonable. But when the chart exactly breaks out remains to be seen. Until we see a 5-wave move up, and we only get 3-wave movements to the upside, even if they extend quite a bit, we're dealing with a range and not a substantial breakout. And until then, the support levels remain relevant. Only if we get a first 5-wave pattern, something like that, then we can add another support zone, okay? 3-wave pullback, and you could add a little bit here in this area, okay? And then we go higher and you do the same thing again. That's just a very, I think, wise way of using Elliott Wave for trading ranges, because I cannot tell you that wave 4 is over. There's no way to do that, okay? I can only tell you what I see right now, and that's a 3-wave move, which means that this support area still remains relevant, and we've run now into resistance. So be aware that this could just change, chop around. We are still technically in a correction. So yeah, that's my update about Optimism. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.